Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 28th of June. After some inflationary concerns earlier in the week, there were some fairly soothing noises from the Federal Reserve, and this was backed up towards the end of the week by the announcement of a $1.2 trillion infrastructure spending plan, which should give further solace to the recovering US economy. It actually had the impact of sending the Nasdaq and the S&P 500 both to record closing highs. It also spilled over into the oil price, which is now up 46% in the year to date. And obviously that infrastructure plan may result in some further energy demand over what could be quite a busy summer in any event. In terms of the UK, the Bank of England recognises that GDP growth is stronger than expected at the moment, as indeed is inflation, but it's agreeing with the Fed that this is a temporary thing, and so it decided to leave both its interest rate and bond buying scheme unchanged at the moment. FTSE 250, obviously a barometer of the UK economy rather more than the Premier Index, up around 9.7% in the year to date. So fairly positive week. Year to date numbers: Dow Jones up 11.7%, S&P 500 up 13.6%, the Nasdaq up 11.5%, and the FTSE 100 up 10.2%. Turning to next week, there's three companies reporting, all of whom have had a fairly good trading period for one reason or another. First one is Associated British Foods. It's got a trading statement. Shares up about 18% over the last year. And clearly it's going to be Primark as usual, which is the centre of attention. How has it fared after the various reopenings from lockdown easings, and also how it is its current foray into the US going? So a couple of things to look out for there, alongside of course how the food businesses have been performing. They've been a good counterbalance while Primark has been struggling during lockdown. Also, full year numbers from Dixons Carphone. Shares up about 34% over the last year. Very positive last time we heard from them in terms of their electricals business and indeed online in general, something to look out for. Few challenges in terms of its mobile business. Let's see what sort of updates they're going to give us there. And another positive coming out of the previous update was that the net debt position had turned into a net cash position. And finally, full year numbers from AO World, up 72% over the last year. The move to online during the pandemic has certainly played into their hands, especially the purchase of white goods and so on. So the question now is whether they've been able to maintain that revenue growth, which has been particularly strong in both the UK and in Germany. Thank you for watching. Have a great week.